Hello everyone, welcome to the Ichimoku.co Daily Markets Review for the trading day ending Tuesday, March 8th. Firstly, looking to the S&P 500, and here we see a confirmed change of trend today, a candle making a lower high and a lower low. A black body candle, and the first black body candle that we've seen for some time, and it suggests that the sellers have taken control of this market. They've shown some strong commitment, and combined with the market facing some resistance around that round number 2000, it's certainly not unexpected. If we look at the previous couple of days trading, some very small bodied indecisive type trading around that round number 2000. So certainly the odds were that we were going to see some selling coming into the market today after the indecision of the last couple of trading days. Now, with the sellers taking control and the a good build of momentum, this suggests that we could see some follow through and the market testing down to around the 1968 level of support. That's going to be an important level for the next few days as we have the Tenkan-sen trading around there, and it may strengthen the potential support in that region. Now, if the market does breach down through that area, we do have potentially solid support at the top of the cloud, the Ichimoku cloud, around this 1958 level. Just down through there are a couple of previous resistance levels, 1955, 1950, and then very strong support extending all the way down through to roughly the bottom of the cloud around 1916. So some very, very solid support below where the market's trading. Now, having said that, if we do see the buyers come back into this market, the round number 2000 may continue to hold as resistance. But if the buyers are strong enough, if they can trade up through there in a strong bullish manner, we could see the market testing up to the 2019 level. In terms of Ichimoku, a bullish market in all three time frames, supported by the Chiker span, with it being above the corresponding price action. So this suggests that any pullback that we see here may be temporary, and we may eventually see the buyers coming back into the market off one of these support levels. Now, just looking at the relative performance against each other of the various indices and some other markets, and importantly the VIX, and the S&P is the one in the green here, down 1.12%, but the strong underperformer today was the Russell 2000, which is a much broader, smaller cap index, down 2.4%, and the better performer was the Dow, which obviously is made up of 30 stocks and higher cap stocks. So the quality stocks weren't down, sold off as much as the lower quality stocks. The Nasdaq, representing the tech stocks, the Nasdaq 100, was down 0.88%. Importantly, however, if we look to the VIX indicator, it was up 7.61%, suggesting that some fear has returned into the market. We do tend to see that when we see the equities indices sell off. In terms of other asset classes, looking at the ETFs, the bonds, TLT, has seen some price appreciation today, up 1.1%, but gold is down 0.46%. So we're not seeing a flight to a safe haven as with the gold asset class, but perhaps a flight to quality as we've seen an increase in the in the bonds today. And just looking at the Dow, it's slightly different type of trading today, and today's candle is certainly not as large as we saw with the S&P, and it suggests that the downside momentum in the Dow has not been as great. We have, however, seen the sellers take control. We have seen a change of trend, and importantly, we have seen the market just close below the important 16,978 support. So this still suggests that there is a possibility of this market continuing to come off, but we should be watching around this 16,805 level, and with the Tenkan-sen trading around there, it may offer itself as very solid support. Now, just looking at our VIX indicator, and here we see that it has been trending down quite strongly as the market was appreciating, which is what we'd expect. So there wasn't a lot of fear in the S&P 500, but we have now seen it start to tick up, and that's not unusual. We had seen it tick up previously, but what may be important is if it moves well above that moving average and above the bands that I've got on the actual VIX indicator, and it will indicate some strength, and we could see it continue to trend up. Also, the VIX oscillator, and our benchmark here is the 5% level, and we're just below that at 4.6%. And once we move above that 5% level on the oscillator, it does suggest that we may see a new downtrending move in the S&P develop further to the downside. Importantly, looking at the RSI of the VIX, and it had been in an oversold level for some time and has moved above the oversold level over the last couple of days and is trending up, and is suggesting that we certainly could see the VIX continue to move higher, and therefore it could mean that there is greater fear in the market, and we could see that trend to the downside that's developed today in the S&P on the daily charts. We could see that continue over the next day or two. Just looking at the high yield bond spread, and that's the spread between high yield corporate bonds versus government bonds, and it basically gives us a measure of risk for companies in the economy, and generally has an impact on the overall equities market. And here we're seeing it trending down, the yield spread trending down, suggesting that the environment for companies was perhaps a little more risk-free, but as now we've seen it start to tick up and we're just trading above its moving average, it is suggesting that there is potential for there to be greater risk, and for that spread to move further apart, further higher. And if we do see it move above that one standard deviation band, we could see the S&P continue to trend lower. Also, the RSI of the spread, of the yield spread here, has moved up from below the oversold area and has moved above the bands that I've put on there, suggesting that the move to higher levels has been quite strong, and this is suggesting that there is a possibility of this trend continuing to the downside. Now, just quickly reviewing those asset classes that I mentioned earlier, and the first is using the ETF's TLT 20+ year Treasury Bond Fund, and here we see it moving higher. It had been trending down below both the Kijun-sen and the Tenkan-sen, looking at the left-hand side chart. A gap up, but finding resistance around the Kijun-sen indicator, so that's going to be an important benchmark. And if we see a bullish close up above there, we could see price action continue higher. We do have a bull market in the longer term time frame. We've been in a bull market for some time by trading above the cloud, but in the medium and short term time frame, we are still just negative. The price rejection here from these levels suggests that we could see the market just trade lower and try to fill that gap that's opened up. It is a very large gap. In terms of performance against the S&P 500, and here we see on the left-hand side the relative strength is below the 100% level, so underperforming, and down below the band, suggesting that the underperformance is quite strong to the downside. But the momentum of that underperformance has actually just ticked up, and sorry, the wrong chart. The momentum of the relative performance here has ticked up and has just moved above the bands, even though it is below the 100% level. So lagging still, the bonds are still lagging the S&P, but it is suggesting that we could start to see something of a recovery underway, but I suggest that a lot depends on how the market reacts around the Kijun-sen and the Tenkan-sen indicators here, which have acted as resistance for today's trading. And next to gold, the gold ETF, and here we see a very strong market in terms of Ichimoku, up above each of the Ichimoku indicators. The Chica span is supporting this positive price action that we've seen. If this market does come off the back of this large black body candle, and where we've seen the sellers take control, we'll be looking to the Tenkan-sen to hold a support. 119.12 is where it trades, and also on the right hand side the upper band 119.85. In terms of relative strength, comparative here, up above the 100% and maintaining up above there, but it has been ticking down quite solidly. So relative strength in terms of momentum has been coming off. And just over the last couple of days, that momentum is moving back towards that 100% level. So still an improving chart here in terms of relative strength, but certainly not leading the overall equities market, even though we've seen very strong performance. But that could change.